What's up, everybody? I hope you are good. And today, I'm gonna talk about the bond market of the Japan. Yeah. In the recent video in which I talked about why America will never ever be its dad, I just mentioned that the rates on the US Treasuries has been going up since a good time. The major shift has happened in the August 2024, which was related to a carry trade event. Now, when the Japan increased the interest rates in the July, the end of July, the demand of the U.S. Treasuries dumped, and the interest rates on the those Treasuries has gone up. It's that trend has been continued since then. So today, let's talk about how this episode, this event, has not ended yet, and how the next episode of this event is going to happen, and how Japan is structurally changing the global bond markets. So, let's start this. If you're not updated your problem, so first let's talk about what's the matter right now. The it's simple. The rates, the yields on the Japanese government bonds has gone up significantly. On the 30-year majority bond, the rate is now 3.2%, and on the 40-year majority bond, the rate is 3.7%. Yeah, on the other hand, when the price falls, the yields go up. So it says that the demand is lower right now, that's why the price is falling. And also in the recent auction of the new bonds issuance, the bid to cover ratio, which signifies that how much there is a demand for the newer bonds of a country, is very much low. Yeah, it's 2.2%. The average is at 3%. So it is showing that the investors don't want to buy the Japanese government bonds now. So it is a structural problem, and it signifies, and it tells us about a lot of variables in the economy. Why this is actually happening? It's one of the visible reason is the demand by the Bank of Japan. Yeah, demand of the Japanese government bonds. The Bank of Japan is intentionally lowering the buying of the Japanese government bonds. It is going to just 3 trillion yen by 2026. Yeah, and the bond holdings has fallen for the first time since 2008 by the Bank of Japan, which is down by almost 11.4 trillion yen, which now stands at 574.2 trillion yen. This is a problem because the all of the out of all of the government bonds, 50%, almost 50% of the government bonds has been held by the Bank of Japan alone. Yeah. Now, if it is downsizing, then there has been some very fiscal concerns about the economy of the Japan, about the debt quality of the Japan. So it may increase the volatility in the market, but this artificial demand has been now just eliminated by the Bank of Japan, and now the market will move towards the uh, real demand, not the artificial demand by the Bank of Japan. So you may ask that why the Bank of Japan has been cracking up the bond market of its country. Yeah, because it needs to be changed. Yeah, the whole philosophy of the Japanese bond market must be changed somehow, because for the past 30 years, there has been some really big other kind of experiments, like the quantitative easing, yield control has happened, and that has not that has actually isolated the Japan from the other developed countries. So Japan has to do this somehow, and how it is doing is the Bank of Japan has increased the interest rate since the 2024 by 3 times. Yeah. When the first it almost stayed at the negative rates for almost a decade before, first it increased by 0.10%, and then when it increased by 0.25% in the July, the August carry trade sell has happened. It was the first trigger in the bond market and the stock market also. So, but now in the January, the Bank of Japan increased interest rate again to 0.5%, and yeah, it has been doing so, and there has been consensus that it will ever be just like this. So the carry trade shift has been happening because people got used to getting loans from the banks of Japan, and because the interest rate was very little, almost negative, so they did not have to pay any interest on that loans, and they used to go invest in the other countries like the United States to get the spread, to get the additional profits, the free profits they can get. They invested in a US stock market, they invested in US treasuries. But when there has been the risk of increasing of the interest rates in the Japan, people have to extract down their holdings from the other countries, from the United States, from the Europe, so that they can pay back their loans. That's why the U.S. Treasuries are also been falling in the price, and the yields on the U.S. Treasuries has also been going up. So why Bank of Japan has to do this? Why they need to do this? The first reason is the inflation in the Japan. Yeah, for the past 30 years, there has been little to no inflation. Almost there was deflation. No, but now that because of the external energy cost after the Russian-Ukraine war, which is the most common and most prominent reason, the energy costs spiked up in the Japan, and on the other hand, that made a lot of other energy and food costs to go up in the Japan, which made the first time wage growth in the Japan. So there was a big chunk of the disposable income in the hands of the people. So that actually exacerbated the inflation in the Japan. To control that inflation, the traditional tools was the monetary policy. So the Japan need to be shifted from the yield curve control, the quantitative easing, to the traditional tools, the monetary policy, to make the economy of the Japan more cohesive with the rest of the world also. So they needed to do this. They needed to increase the interest rates to control this kind of inflation. There has been some kind of demographics that led the Japan to increase the interest rate also, and one of them is the aging population. Yeah, a good chunk of the population of the Japan is of the older people, and that means the more pension is, the more needs of the pension funds. They need to demand higher yields. So to make this problem less, they needed to increase the interest rate to in- give more profits to the pension funds. But on the other hand, the young people are more risk takers. Yeah, if we think about that, because the young people wanted to invest in some risky assets like the US stocks, the crypto. So against those options, the Bank of Japan needed to increase the interest rates to make the yields, to make the bonds more attractive in front of them. So these are the also reasons why the Bank of Japan increased the interest rates. So now we can say that Japan has been going from the world of the quantitative easing to the quantitative tightening. See, yeah, because the Bank of Japan is now trying to buy less of the less bonds, and also eliminating the bonds from their balance sheet. There will be more liquidity in the market. There will be more liquidity by the market makers, by the investors. Which will tighten the spreads of the price, and market will be gone from the that, because the Bank of Japan was before the price maker in the bond market, because of the huge supremacy in the bond market. But now they are intentionally stepping back. The market will become self price maker. Yeah, there will be rediscovery of the price of the bonds by the investors, and the Bank of Japan will become a price taker now. So yeah, this shift is happening, and yeah, today on the June 4, the Bank of Japan has scheduled, you can see from this document, to buy some more bonds. of the yeah, Japanese government bonds, but in the less quantity against the earlier periods. So the Japan has been going from the world of the quantitative easing, from the world of the yield curve control towards the quantitative tightening, towards the traditional monetary tools. But there's a risk towards it. Yeah, there will be a wall over risk because the Bank of Japan is stepping back from the monthly purchases. Before it was the Bank of Japan which would just step in the market and buy those bonds. But now the investors has to buy those bonds. But and on the other hand, if the investor did not want to buy these bonds, yeah, this is happening right now. That's why the yields is going up because the investor don't want to buy those bonds. So there's a rollover risk in the market, and it can create some cracks in the bond market. And yeah, the Japan is one of the most indebted country in the world with the debt to GDP ratio of about 250% plus. Yeah. This is a fiscal concern now for the investors because now the real investors are entering in the market. This is a concern for them. Too much debt is the concern on the fiscal sustainability, which is creating a less demand for the treasury for the Japanese bonds, which and the investors now will demand more and higher rates. So this can literally affect the carry trades in the world, which is linked to the Japan. Because it may lead the capital also from the United States, the Europe, and the other developed countries in which the Japanese investors has invested, and also the institutional and foreign investors got loans from the Japan to invest in these markets. If this is gonna happen, there will also be the demand of the higher yields from of, of the debt of these countries, because a lot of investors has invested in the bond markets of these countries from by taking the loans from the Japan. So when these investors were gonna get their money back from these bond markets, the prices of the bonds will go down, and the yields will go up. So it will also create it will have a spiral effect on the rest of the bond markets, and yeah, it will also affect the stock market and may cause some corrections and crashes in the stock market, just like the one happened in the August 2024. But in this fiasco, the one thing is happening for the Japan, which is the intentional by the Bank of Japan to do so, and which needed is the strengthening of the Japanese yen. Yeah, it has strengthened about 8% since the start of the year against the United States dollar, which is because of the higher interest rates or from the Japan. So it is a good thing for the Japan because it is now showing that Japan is moving towards the more cohesiveness with the rest of the world in matters of the financial system. It is not lagging behind like it did for the past 30 years. So this was my legal analysis about this matter, and if you like my analysis, then don't forget to show some support and tell me in the comments what do you think about this matter. So, bye.